Too many investors want to get rich this year. They scroll through the property forums, chase hotspots, and think one clever deal will change their life. But here's the truth. Real wealth in property is built through strategy, patience, and the ability to play the long game. I'm Alex Watson from Funded Finance, and today we're talking about the mindset that separates real investors from speculators, how to build sustainable long-term wealth through property. Let's start with this. Property is not a quick win game. It's a compounding game. Short-term thinkers focus on buying low, selling high. They want fast results, quick equity, or the next booming suburb. But long-term investors focus on building assets that produce income and grow consistently over time. Think of it like planting trees. A short-term investor wants fruit tomorrow, and a long-term investor plants an orchard. The difference? Time, structure, discipline. When you play the long game, your decisions aren't driven by short-term market noise. You're guided by data, cash flow, and a clear strategy. You know your goals and you know how each purchase moves you closer to them. And that's how true wealth is built, not by guessing the market, but by staying in it. There's a dangerous mindset I see far too often. You only live once. Just go all in. YOLO, am I right? And it's emotional investing dressed up as ambition. These are the people who buy in mining towns during a boom, stretch themselves thin, chasing capital growth, or rely on TikTok trends for strategy. And they might win for a second, but when interest rates move, rents soften, or yields drop, they're exposed because they never had a real plan. Smart investors understand risk. They know that leverage amplifies both gains and losses, and they build buffers. They manage cash flow, and they think about exit strategies even before they've bought a single property. The goal is not to gamble, it's actually to control the variables. So if you're buying purely out of fear of missing out, it's a good driver, but it's not a strategy. It's purely speculation. The long-term investor moves differently. They know slow and steady isn't actually boring, it's sustainable. And here's where patience pays off. Compounding equity. So let's break this down in a simple term, right? So equity grows from two sources, capital growth and debt reduction. When you hold a good asset over time and manage your debt strategically, both work together to accelerate your growth. Say you own a $600,000 investment property. It grows at a modest 5% per year. That's $30,000 in equity growth annually. Over 10 years, that's roughly $300,000 without lifting a finger. Now, if you also use your rental income and tax benefits to pay down your loan faster, you're growing equity from both sides, top and bottom. And that's the secret of compounding. It's quiet, it's slow, and it's incredibly powerful. Short-term investors rarely see it because they sell too soon. Long-term investors harness it and reinvest the equity to buy more assets, growing their portfolio sustainably. Everyone wants to time the market, buy at the bottom, sell at the top. But the truth is, even professionals rarely get that perfect. What matters more is time in the market, staying invested long enough to let your assets grow for you. Markets rise, dip, and rise again, but those who stay invested through the cycles always come out ahead. And it's not sexy, it's not headline worthy, but it actually works. Consistency, sticking to your strategy, reviewing your portfolio regularly, and refinancing when it makes sense. That's how you stay ahead. You don't need to own 10 properties tomorrow. You need to own the right property today and give it time to perform. To play the long game, you need a framework, and here's what that looks like. Clear financial goals. Know what you're building towards. Is it income replacement, generational wealth, or financial freedom by a certain age? Every decision should align with that. Structure first, growth second. The way you set up your loan, ownership, entities, and cash flow buffers determines how far you can grow. Poor structure limits your borrowing power and exposes you to unnecessary risk. Buy quality assets, not cheap ones. Cheap often looks tempting, but long-term investors prioritize some fundamental rules. Population growth, infrastructure, job diversity, rental demand, and potentiality. Regular portfolio reviews. Even the best strategy needs adjusting. Property performance changes over time. Reviewing your loans, yields, and tax position annually, if not 6 monthly, keeps your portfolio efficient. And that's how you build wealth methodically, not emotionally. Mindset, the quiet advantage. The best investors I know aren't the loudest, and they're not actually chasing trends. They're quietly consistent. They understand wealth creation isn't actually linear, and some years are about growth, others are about consolidation. They accept that setbacks happen. Valuations fluctuate, tenants move out, interest rates shift, but they stay the course, because the long-term investor mindset is built on patience, not panic. And the mindset keeps you grounded when everyone else is either greedy or fearful. As Warren Buffett says, the market is a device for transferring money from the impatient to the patient. Let's bring it all together. If you take one thing away, let it be this: the long-term game always wins. Forget the noise, the hype, the so-called shortcuts. Build solid foundations, manage your cash flow, review your strategy, and give your investments time to mature. Over time, your portfolio will do the heavy lifting through capital growth, debt reduction, and compounding equity. And that's how you create financial freedom that lasts. If you're serious about building long-term wealth through property, not gambling with trends, book a strategy call with my team at Funded Finance, and we'll show you how to structure your portfolio for growth, improve your cash flow position, and make sure your money is compounding in the right direction. I'm Alex Watson from Funded Finance, helping you play the long game and build your funded future.